This is Matthew Cratter from Bitcoin University. Today I want to answer the question, are the OTC desks running out of Bitcoin? This question comes from yesterday's video about who sets the price of Bitcoin, and Gerhard3838 commented, soon the OTC desks will be empty. And this is something I've been seeing on Twitter as well. After watching this video, you'll realize that this video can also be applied to crypto exchanges, Bitcoin exchanges, P2P, peer-to-peer exchanges, stock exchanges, etc. Now, what's an OTC desk? It's simply a trading desk that you can call up to place large orders for Bitcoin, usually in excess of $100,000 or $500,000. And these desks really cater to those with millions of dollars of Bitcoin to buy or sell. OTC desks exist everywhere in the investment world for high net worth individuals and institutional investors for most traded assets like stocks, bonds, currencies, derivatives, and it's no exception now for Bitcoin, now that it's a $1.4, $1.5 trillion asset. Now, why might one use an OTC desk for Bitcoin? First of all, there's the white glove treatment. You're not stuck on the phone with Coinbase support. Lower trading fees for the most part. Also, and this is a very high-class problem to have, but also it's a lot of work to point and click and buy $10,000 worth of Bitcoin at a time on an app when you're trying to execute a 10, a 50, $100 million buy order or sell order. I've actually never used an OTC desk to buy Bitcoin, though I did use them many times over the years when I was still in the hedge fund industry. Here's an example of this sort of personalized private client service we're talking about. This is what River does, tailored to family offices, trusts, high net worth individuals, and institutional investors. And we can see here it says tailored to investment amounts of 100K or more. We can check out their fees. The fees are good. They're not as low as Coinbase, for example, but you can see that the more you buy, the lower the transaction fee goes down. So if you're buying more than $5 million, it goes down to 0.8%. Swan also offers this private client service, as does Strike, if any of you are looking to buy large amounts of Bitcoin like that. Now, where do OTC desks get their Bitcoin? Number one, they get them from what's called crossing customer orders. So for example, if you're buying Bitcoin, they will match all or some of your order with another customer, if they can, another customer who's selling Bitcoin through the same OTC desk, and vice versa. If you're selling Bitcoin, they'll try to match you with a buyer that they know, and they get to take the spread on either side, and that's really how they make money. Also, OTC desks can pick up the phone or use the software to get Bitcoin from Coinbase or Kraken or Binance. They can call the OTC desk there. They can call OTC desks anywhere. And this is sort of how the network of liquidity works. So do OTC desks ever run out of Bitcoin? That's the question I want to answer now. But before I do that, I just ask you if you're finding this video helpful so far, to help to support the channel by clicking the subscribe button, leave a like, leave a comment, suggestion, topic for a future video, and also share this video with a friend or family member. Do the OTC desks ever run out of Bitcoin? Never. They never run out of Bitcoin. It's a little bit like asking if the NASDAQ ever runs out of shares of Apple or Microsoft. It doesn't. Did the NASDAQ run out of Nvidia lately? No, it didn't. What happened instead is the price adjusted upwards to draw in new sellers. This is what happens when on the margin the buyers are more aggressive than the sellers. You get something looking like this. And as Nvidia has gone from a $10 billion stock to a $3 trillion stock, the exchanges have not run out of Nvidia shares. Now, the same thing happens with Bitcoin. If there are lots of buyers, they will need to compete with each other for available BTC that is being sold at the level that they're willing to pay. So let's say that all the sellers of BTC at 70,000 run out. The sellers are exhausted. Buyers will then need to bid $70,001 to draw new sellers. If that doesn't work, they'll need to bid $70,002, etc. In practice, there's always some sellers at every level. If the sellers run out, for example, this would be the one case where a whole bunch of sellers might withdraw their offers. If there's a big news event like the US now accepts Bitcoin as legal tender, then what happens is the price may instantly gap up to a level where new sellers are willing to transact. And we saw this happen with Nvidia on May 22nd going to May 23rd. I'm not sure what the news was because I don't follow it very closely. Maybe it was part of the earnings run up, but we see this price gap, and that's because all the sellers basically disappeared after a certain news, and buyers needed to bid higher and higher until they were able to draw some new sellers out of the woodwork at around 1,017 per share. Now, if an OTC desk temporarily runs out of internal orders that it can cross, for example, let's say someone wants to buy $50 million worth of Bitcoin at $70,000 a coin, and the OTC desk only has sell orders of 45 million at that same price at 70,000 that they can use, that they can cross to fill the buy order, the OTC desk can always call up other OTC desks or large exchanges like Coinbase, Kraken, Binance, etc. And this is why the price of Bitcoin, as we discussed yesterday, the price of Bitcoin on OTC desks has an effect on the price of Bitcoin on exchanges and vice versa. There's an arbitrage across OTC desks, exchanges, decentralized exchanges, individuals, etc. And if the price is too low in one place and too high in another place, people will make those prices converge by buying the Bitcoin at the low price place and selling it at the high price place. This is kind of classic finance arbitrage. What's the end game here though? How much can the price of Bitcoin go up in US dollars to draw in new sellers? Unfortunately, there is a limit, and that limit is reached when holders of Bitcoin no longer want any US dollars or any other fiat money at any price in exchange for their Bitcoin. There's a technical term for this. It's called winning. We could also call this the Weimar event horizon, where all fiat money eventually ends up. Eventually you end up with kids just playing with it, wheeling it around in wheelbarrows, or lighting it on fire to heat homes. At the beginning of World War I, it took 4.2, I believe they're Reichsmarks, 4.2 marks to buy a US dollar. And by November of 1923, it took 44.2 billion marks to buy a US dollar. So at that point, the currency and the paper money is virtually worthless. So what in the world are you supposed to do with your BTC at that point if there's no fiat left to exchange it for? It's easy. You just buy stuff with it like food, clothes, shelter, luxuries, or you pay people or AI to do stuff for you. You buy goods and services with it like we do with any other form of money. We already know that Bitcoin is the best money ever. Over the next 50 years, the rest of the world is going to figure this out too. And at that point, the OTC desks will still have enough Bitcoin. And this is why. That's because there will be people using Bitcoin to buy stocks and other investments from OTC desks, just like they use US dollars today. Or perhaps will stocks no longer exist at that point? I think that's an interesting question, but that's definitely a topic for another video. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.